Hello, everyone. Happy Sunday. This is Simon with AvaTrade. We're approaching the holidays, so before I forget, of course, I want to wish everyone happy holidays, happy New Year, lots of health, success, and all the amazing things. So we're gonna have a funny week. But before we get into it, just want to say a few things about myself. This is me, Simon Friedman. I'm a senior account manager. Excuse me for my voice again. I'm still not fully recovered. I'm a senior account manager with AvaTrade, and I've been involved in this amazing business for over 23 years. I started to trade in June of 2000 as a prop trader back in New York City, and after doing it for 11 years, I moved into a less stressful environment and started also to mentor and educate other traders. And currently, I have a great opportunity to assist our customers at AvaTrade. So I started to say that we're going to have a funny week. It's a holiday, of course. People are preparing. It's a very happy time of the year, and I miss being in New York. New York is really, really cool around this time with the Christmas mood and happy people buying presents. So it's going to be a short week. We'll talk about it in a moment. So the agenda of the webinar. If this is for new people, of course, the regulars already know what we do here. We try to create a plan for the week pretty much in simple words, and we discuss a little bit of fundamentals, what did happen, what might happen. We talk a little bit about the economic calendar, and we discuss indices, stocks, commodities, and Forex. Excuse me. So today we'll be discussing indices. We'll run through a few stocks like Apple, Nike, Boeing, Intel, Meta, Pfizer, Netflix, bank sector, and Uber. We'll talk about commodities that includes oil, natural gas, gold, cocoa, sugar, palladium. We'll talk about Forex, of course. Excuse me. We'll talk about majors and a few specific pairs, and that's it pretty much. This is the risk warning. What we do here is purely educational. You can find a risk warning statement at avatrade.com. These are the channels. I apologize. I'm just going to pour myself a little water. Sorry about that. Okay, these are our channels. You can take a look. You have Telegram, you have Twitter, which is X now. You have my favorite YouTube channel. And here you can find a lot of educational material, tutorials. You can find all the webinars that we do are being posted. So don't worry about missing a webinar. I mean, it's better to have it live, of course, but if you can't, because of obvious reasons, you can go back to YouTube and find the webinar and watch it at your convenient time. Of course, if you are watching this on YouTube, please put the likes if you like it, or click on the likes, subscribe, click on that bell, and it will notify you whenever we add new material there, and it's being done on daily basis. Also share with people that you think might benefit from it. Okay, so we'll start with a little bit of fundamentals. As you know, we had a nice run, and usually the Santa Claus rally happens the last 5 days, right after, between Christmas and New Year. But some analysts are saying that it might not happen, or they actually, some of them are convinced it won't happen, because we had a huge run pretty much into the levels that we are now. We're at the record levels. And you can find this article at MarketWatch. Very nice article, explains things and gives a little bit of projections, what's next. So I figured, also the picture is nice. So I figured I'd post it. So again, on a serious note, the market, some analysts are saying the market is overextended and expecting kind of a cool down of the excitement of the investors, and I guess we'll see what happens. Now, of course, the market is closed on Christmas. Some markets are closed on the 26th as well. So the following week we have similar actions. So just be aware of the market hours. So you might want to get out or get in, whatever your plan is. So the idea is not to be surprised by coming in and not being able to trade or get in or get out of your positions. Okay, so before we go into economic calendar, we had some numbers that came out last week and towards the end of the week. Of course, as you know, the market sold and then we recovered a little bit when the numbers came on the personal consumption expenditure index, and market reacted to it. So we almost recover that loss. We'll take a look at the charts shortly. So we'll take a look at indices and individual stocks as well. So as you could see, this is actually the first time that I posted not just the high impact events, because it's only one high impact for the upcoming week in the calendar, which is the Bank of Japan governor speech. The rest is, as you could see, in orange, which is the mid impact. But I put it on, otherwise I wouldn't really have anything to show. And it's expected. We're in the holiday mood. Not a lot of things happening. Now, why I said in the beginning that we are having a funny week, the last week of December, a lot of things are happening. So as I said, market can run and make new highs. In our situation, it might not happen because we had the huge run already happening. Also, some funds would be closing some positions, reopening others, kind of reshuffling or cleaning the house and changing their portfolios and other things. Some individual traders, also businesses, might close some positions for tax purposes and so on. There's a lot of things happening behind the scenes, so we don't really know, and we won't know what's exactly happening. That's why I'm saying it's a funny week, because a lot of times it doesn't really show the real pictures, just the actions and reshuffling of positions and other things that's happening. Also, it's a short week. The volume definitely goes down during this week as a lot of people are traveling, celebrating other things. So just be prepared for that. Be super cautious. Maybe extra money in risk management. Just a little warning here. From my experience, a lot of things are happening that some of them don't make sense. All right, economic calendar. So Monday we have Bank of Japan Governor Ueda, I guess you pronounce it. I'm used to Kuroda's name for many years. So this is important, and we definitely will be watching Japanese yen and the Japanese index, the Nikkei. Because we are getting closer to that change of policy and start increasing the interest rate by Bank of Japan. Just to remind, especially to new people, it's the only major central bank that still has negative interest rates, minus 0.1%. So we'll definitely will be watching and paying attention to his speech, giving a little bit of a clue when that might happen. Tuesday, also, we have unemployment data from Japan. Now, Tuesday, we have housing price index from US. Wednesday, we have some numbers from Switzerland, and retail trades from Japan again. We have Thursday, initial jobless claims from US and pending home sales as well from US. Friday, we have CPI numbers from, I guess it's Spain. See, sorry for not being prepared for this. And Chicago Purchasing Managers Index, which is important here. That's on Friday. So as you see, the week is really dry for announcements. And as I said, it's going to be slow volume. Okay, so we'll move now to the MT4. We'll start going through the markets and try to see what might happen. So we'll start with China. China is bouncing a little bit after sell. Just I want to zoom out just to show you here. We spoke about it last week, October 10th, the week of October 10th of last year. We retested it. We closed below the week before, and then this past week we're bouncing a little bit. So we are back above that 11,150 that we discussed. The question is, what's next? If we manage to hold here and start building a little bit of support, that we might see a little bit of recovery. Just to remind us, as the US and European markets are making record highs or getting to their record highs, Chinese market is showing us a lot of weakness. And just to remind us, it's all started with COVID, with the major shutdowns, and then it caused a lot of issues in the industrial sector and especially in the real estate developments. A lot of developers, or some of them, got out of business, but not being able to repay the debt and so on. So the situation in China hasn't been so great, to say the least. So let's see if we are managing here to move higher from these levels, if we start seeing some price action showing the support around 11,150. If we do break down again, we might see continuation to the downside and seeing further down move. Now, as you could see, 5 consecutive months we've been down, and we're still holding this level. So let's see what happens there. So that's on China. Now, Japan, as I said, we'll be watching this level around 33,450 as the governor will be speaking, and we're getting closer to that decision by the Bank of Japan on possible increase in interest rates, which would cause the move up in yen, and it would put pressure on the index. Now let's move to the U.S. indices. Friday, they moved slightly up. Dow Jones moved up 0.2%, S&P moved up 0.8%, and Nasdaq jumped 1.3%. So let's take a look at these indices. Okay, now as you could see, this was Wednesday's sell-off, and we are trying to recover and reclaim that level. Now, in 2 days, we've been able to return roughly 50% of that drop. Is S&P 500. It's one of the 3 indices that haven't managed to close at the all-time highs. We did hit it, but I think we didn't close above it. So that's on S&Ps. Nasdaq, the same idea. All 3 of them sold on Wednesday, and we tried to recover. So I think the high of Wednesday should be our immediate resistance, and the low of Wednesday of that drop, we might be watching that level on a possible continuation to the downside. As I said, some analysts are predicting that the market will cool down and we'll see some downside move. Others are excited about the continuation and the Santa Claus rally coming into manifestation. So that's excuse me, that's on US. German index DAX also cooling down a little bit here, and just to show us we are at the all-time highs. So we'll be watching that. So put it all together, we had a very strong week, even though with the Wednesday sell-off, we kind of recovered at least half of it, and we are holding to those end year gains. Let's see how this week plays for us. Okay, so we'll move to individual stocks, and I'd like to start with Apple as it's, I think, the biggest company by market capitalization, and I think we are at these levels where we are at the $3 trillion. I think if we move below, it will go below that number in market cap. So as you could see here, this is the Wednesday sell-off on Apple, and unlike other stocks that try, or the indices try to recover on Thursday and Friday, Apple continues lower. So I would be really watching Apple, and for simple reason, as we mentioned last week, that Chinese government, or China, they announced that they are expanding the ban of the Apple products to other agencies and entities. And of course, first of all, it's iPhone. So it, I was going to say it might hurt Apple company, but I think it will hurt them because it's a huge market. And if those sales that already were showing a little bit of a slowdown, now it's going to be, I mean, to say the least, millions of products that won't be selling to China. So that's Apple. Let's see how this week plays for the stock. I think around 190 is psychological level for Apple. So let's see if we're holding that level there. Nike disappointed the market with the next 6 months projection. They said that consumers are being cautious and they're expecting lower sales than that were predicted previously. So the stock fell significantly, about 11.8%, almost 12% sell-off. And I will be watching, of course, anything retail area, because the comment in that call was saying clearly that they are expecting the cool down in the consumers' activity because of them being more cautious in spending, I guess. That's my opinion already. So that's Nike. Let's see what happens now. It was a huge gap, of course. Let's see if it tries to recover a little bit. Let's just zoom out. We did erase 3 weeks of advanced move in one session, pretty much. Let's take a look at Boeing. After having a nice flight, we are facing some resistance here. And let's see if this consolidation will lead to further move down or we fly higher. So we'll be watching Boeing, of course. Intel continues to be strong. Now, as you could see here, Wednesday it did sell, but it didn't go below the previous day. And the next 2 days, we are going higher here. So we are closing at 47.95. I would be watching this 49th area where there was a lot of actions, and after failing to go higher, we sold. So we're about $1 away from that level. Oh, if we do break it, we might go and retest these highs here from March of last year, which was almost $52, 51.94. So this 49 key level we'll be watching. Of course, Meta, Facebook. It's been strong. As you could see here, it didn't experience a sell-off on Wednesday. We did finish in green, and the next 2 days we're trading higher. But the thing is, we are facing this resistance here at around 353. As you could see here, this is the weekly chart. And this is 2 years ago, mid-November. And the next week, we pretty much face the same resistance. The high here is 353.35, and the high here is at 353.54. And we closed right here at those levels, 353.51. So let's just mark the high of, this was the high actually on last week. but we did reject it. So around these levels, 353.5, we'll be watching for Meta, either to break it and go higher or to show us some reversal price action here. We spoke about Pfizer a few weeks in a row. Take a look how nicely we did close that gap. So this thing happened when they announced the worst projections for the earnings. And then last Friday, not this one, just past the one before, they announced that they're increasing the dividends by 1 penny, and they purchased Seagen, I think the name of it, the company that's specializing in research and development in the cancer medication. So as we mentioned last week, that this might attract a lot of investors because of the potential sales of the drugs, of course, and the dividends as well. And it looks like we were right. Since last week, we had a nice recovery. We did close the gap. The question is, what's next? Would we continue higher, or after closing the gap, we'll go retest and find what the real support is? So we'll be watching Pfizer definitely. Netflix, as you could see here, the stock's been strong, and we did close above this mid-July level of 483.06, and the last 3 sessions of the week were in red. So this would really worry me a little bit, as the market went higher the last 2 days and Netflix moved lower, and we closed below the Wednesday sell. So I would watch, first of all, daily chart on these levels. You could see we had 2 consecutive retests of this level. This was on July 19th, the high of 483.06, and then 482.34. It was November 22nd. So let's see if we start, or if we continue sliding to these levels and we hold, we might see continuation. If we break below and start building resistance, we might see a move to the downside on Netflix. Banks, let's take a look what's happening. Last time I think we spoke about potential profit taking in banks, and as you could see here on JP Morgan, after reaching above 168, we had the retest of that level on Wednesday, and we are trading below. Goldman Sachs, we had a nice run, and this past week we struggled to go any higher from here. Bank of America as well. So I think the recent highs should be our indication as a resistance. Let's use the leader, which is JP Morgan as of now. So this level pretty much stays around 168, and Goldman, we're going to mark around 386 as a possible resistance. Now, just to remind us, when we kick the earning reports in January, I think the banks are going to be the first one. I believe it's about around January 12th when you see major banks reporting. So definitely we'll be watching that. It's about 2 weeks from now, a little bit more. So the banks are holding to these recent gains. Let's see if this continues, or after consolidation, we'll see some move to the downside. Again, it's all based on the excitement of the Feds starting to cut the rates in the first half, potentially. There's no proof to it, just a thought. Now, interestingly enough, take a look here. Goldman just hit the Goldman cross, as analysts like to call it, which could be technical signal for buying. As you could see here, the 50-day moving average crossing above the 200. Interesting. So those are the banks. And let's take a look at Uber really quick. Where are you, Uber? Here we are. So Uber also, after having a nice run, 1, 2, 3, 4, 5, 6, 7 consecutive weeks, we are holding to those gains. And this level here from April of 2021, we're holding above this level. The high here was 61.46. So we'll definitely will be watching. I'll just correct this, 51.46. All right. As you could see here, we are playing with this level a lot. The moment we broke through it, we had a nice price action, but we didn't move any higher than on Wednesday on the sell-off on the market. We went below, then green day, and I think this was a red day. We were sitting right on that level. So we'll be watching Uber, of course, on either possible continuation to the upside or sliding below and possibly going into a little bit of correction. And as I always say, it depends what the general market would be doing. And this is, I guess, the fight between those who believe in Santa Claus rally and those who are being pessimistic and saying that it already happened. So now it's time for market to cool down. Okay, so let's move to commodities. With China recovering a little bit, we will check first of all copper, which was anyway strong here. And here's another one. Take a look. We just closed with the golden cross, the 50 about the 200 moving average. Let's see what's the potential here. Monthly chart. It could be triggering a buying here, especially if China starts showing some strength. And even on the weakness of China, as you could see here on the daily chart, we managed to hold up on copper. So let's see if we are getting any stronger here. Crude oil as well. After holding this 72 area, following the sell-off here, we are looking for possible move to the upside again on the China news, but there are a lot of fundamentals, including the environmental issues and things that are showing some switch from the usage or using of oil into the green energy and so on. So I'm not a big specialist on that. I'm not going to pretend and definitely will not try to explain it. But it could be it could be in the upcoming year that we'll see a little bit of the pressure on the crude oil. As you could see here, we are about the 72. So it looks like currently we are in a $5 channel between 72 and 77. Also here, as I mentioned to you, we have something the opposite of the golden cross, which is the dead cross. Again, this is not solid, but some investors or some technicians, actually technical analysts are paying attention to these things. And sometimes you could see it even in the broadcasts of those channels when they mention these things. So here we had 50 moving average crossing below the 200. That was on December 13th, around that. So that technically could mean the continuation of the sell-off. Let's see, the monthly chart shows it's very choppy with a lot of tails. Anyway, we'll see what the fundamentals are. We'll see. But logically speaking, if China manages to hold this and start an upside move, we might see some strength in the oil. So again, we have a clear channel now between 72 and 77. Let's see what oil brings to us. Natural gas, it's been playing with this 250 level, as we mentioned it many times. Why 250? The move to the upside started right here. Was a lot of actions around that level. So this was a strong move on Thursday. Friday we continued with the green day. So let's see what happens here. As I said, 250. We've been really playing with that level a lot, and we are in the winter time. We might see some excitement in the natural gas, so we'll be watching that. Gold. Where are you, gold? Gold, 2008, we held nicely. We broke through it to the upside, as you could see here in mid-December. Then we made high without touching it, so it's a strong sign. Now, we might continue high here and retest the highs, but what scares me a little bit here is the 2-day advance are pretty much strong, aggressive advance was erased in 1 day pretty much. So I'm sure the investors are cautious after seeing this reversal the very next day. That's why you could see these tails of buyers and then sellers pushing it lower. So we'll be watching it again. It's the last week of the year. It could be a lot of choppy trading. Let's see what happens. Palladium, as we mentioned, from this level around 950 over the very nice move to the upside, very strong vertical pretty much, kicking everybody out. A lot of shorts and new buyers are coming in. So this is definitely showing that a lot of shorts were in panic, closing their short positions because of a huge move to the upside. And we are fighting now the 200 moving average over here. And also, as far as levels, this level around 1250. So you could see here we had two tails. First one is 1250, 470. The last one was on Friday, 258.20 and closing lower. So let's see if we see any kind of correction here, or if we are breaking above this 1257 area and above the 200 moving average, we might see continuation. But it could be that this move is overextended, so we might see the correction maybe to around this level here, 1160, or to the 100 moving average. We need the averages to catch up with this move, as you could see here. So that's palladium. Cocoa, it's been holding strong, but not making new highs, and it's rounding up here a little bit. So again, just to remind us, all this move is caused by fundamentals, the shortage of cocoa, actually, cocoa beans, especially from Ivory Coast, the biggest production. And let's take a look at monthly charts. We're pretty much at the super highs, to say it at least. And we are kind of stumbling here around 4,300. So definitely we'll be watching it. As you could see here, we had the sell-off back in the beginning of December, 3 consecutive sessions, and then the buyers came in again, retest the highs, and we are trading above it. So I would be watching this level here of initial stop of the move. The high here is 42.83. So as you could see here, now the picture looks a little bit clearer. So take a look. We retest that level again. We traded below, then we closed above red day, and again closing above it. So it looks like it wants to go higher, but it's lacking the momentum. So let's see if the buyers manage to push it through, or the sellers might win. And if we dive below 42.80, start building resistance here, we might actually see a nice move to the downside. So here would be our first retest. The low here is 40.99. 4,100, and we'll take it from there. So definitely we'll be watching cocoa. Sugar, after this sell-off, it looks like we're showing a little bit of strength here. Again, is it a temporary strength or is it based on something? We'll find out. Meanwhile, this is the level from which we moved higher. As you could see here, it was a resistance, then a lot of actions, and then a super strong move to the upside. So I would be watching this level here around 2040, as we marked here. Back to daily chart. It looks right here. We closed right on that level. The next, on Friday, we had the green day, and we did attempt to break above the previous day, but we managed to stay green, but below this level. So 2040 will be definitely watching here. All right. So that's as far as commodities. Let's move to Forex. We'll start with dollar index. As you could see here, Thursday was a strong sell-off, but we did manage to hold this level. So what we're going to do, we're going to mark this level here, low of 101.37. Let's do that. 101.37. Okay. So as you could see here, we did close below. This is a 4-hour chart just to see a little bit clearer picture here. We are trading below. Of course, it's all Feds related. As logically speaking, if the Feds start cutting the rates sooner than later, then would affect the US dollar, of course. As you could see, there's been a sell-off. We're clearly in a downtrend, making lower lows, lower highs. And let's see how we're doing here. This is not a serious level. I'm just measuring here against the this second day of the sell-off here. If we are continuing lower, as you could see here, we might go below 100, which is psychological level here. So the low here was 99.24. So if we do break and start building resistance, or we can just fall pretty much. So this 99.25 level could be the next level of support. And of course, if we start building support, we might see a bounce. So as you know here, we mentioned a few weeks in a row between 103, 104. Now we're currently between 101 and 103 levels. It looks like it's a lot of downside pressure on the dollar. So let's go through majors really quick. Even though on the weakness of the dollar, the majors are experiencing also weakness, because on the sell-off of a dollar, if the pound would be strong, we would definitely break through 28. So the 128 level remains resistance. As you could see here, it didn't really react a lot to the weakness of a dollar. It shows the weakness in the pound itself. So as you could see here, the 128 remains the resistance. On euro, 110 remains resistance as well. So we are trying to play with this level, but we haven't seen any solid mood or move to the upside. Of course, the yen will be watching. As I mentioned to you, there's a speech of governor of the bank. We had a few moves to the downside here with the spikes. So around 141.60. We'll see how we act around that level. We are below old moving average here. And of course, everything related to yen we'll be watching. We'll be watching other pairs. As you could see, euro yen is sitting on 200 moving average. CAD yen, so most of them are trading around 200 moving average. And the pair that we've been talking a lot, which is CHF JPY, it's been holding strong. We are sitting on the 100 moving average here. And if you look at the price action or the levels, as you could see here, we had a few retests of this level here around 166.40. We are trading below that level. after a nice move on Tuesday, I believe. Then Wednesday, Thursday, and Friday, we had a little bit of a sliding actions here. So we are below these levels, and we are between 100 and the 50 moving average. So I'll be watching CHF, JPY, pound yen as well week. So definitely this week, especially into the speech, I will be watching the yen. Now, dollar Swiss is holding around here, and it's all based on the weakness of the dollar, of course. So we'll watch this level here, very serious level. This is the weekly chart. We had 3 weeks in a row with the huge tails and turning up again. And again, we are holding this level. So it's either this holding is continuous and we might see bounce to the upside, or the buyers might give up and the sellers could push through, and we might continue lower here on dollar Swiss. Aussie dollar, go to daily chart. We are facing resistance at the current levels, as you could see here. We did stop right on this level here around 0.6794, 0.68, let's put it that way. And Friday we rejected that level and closed below 168 again. So let's see what happens. But you could see here the 50-day moving average is catching up with the 200. So it could trigger that technical idea of golden cross. As you could see on the monthly chart, it does have a potential of moving higher. We have a second consecutive month to the upside. So that's on Aussie dollar. Definitely this current level around 0.68 is worth watching. New Zealand dollar, similar picture here. We are pushing through. It's a second consecutive month to the upside. Let's see how it plays out. And the last pair, the one that we've been watching for a few weeks. As you could see here, CAD CHF has been playing with this level for a few weeks now. As I mentioned to you, it's a key level here. So as long as we are below this level, there's a chance of continuation to the downside. And if we, here was the hope that kind of disappeared really quickly. But you could see that a major accumulation is happening here. And as I mentioned in few sessions, when you see a major accumulation in pretty much a narrow channel, it means that something is cooking here. So the instrument will go one way or another. Of course, how smart of me to say it. Nobody knows where, of course, but after making this tremendous move to the downside and a lot of accumulation, we might see some serious moves. So definitely we'll be watching or continue watching CAD CHF. And let's take a look at Bitcoin. So you could see this level has been really the instrument is stuck at the current levels. Just to remind us, all this move was the expectations. Still, we are waiting for those release of those ETFs that investors are waiting for, or crypto-based ETFs, or electronically trading funds, as they call them. So as you could see here, the instrument is setting up for a run. A lot of accumulation, a lot of actions around these current levels. So just to remind us that back in November of 2021, we hit the high of 68.9, almost 69,000. Some people are still holding there, so they They are crossing their fingers. And of course, the new investors are coming in. Of course, there's also the other side, the sellers. They think that we're going lower, but we are, excuse me, we are stuck at these current levels here. So we'll be waiting for next move. That's it pretty much. Again, I want to remind everyone to use our channels, especially the YouTube channel. We can find a lot of information. You have Telegram as well, and the X or Twitter. I want to take this opportunity again to wish everyone happy holidays, happy new year. Take care of yourself. Stay happy, stay healthy, stay profitable. And I guess we'll have a session before the New Year's. But anyway, if you're not here, I want to wish everyone, of course, a happy New Year to you and your families. And all the best. Take care.